Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 4th, 2019. Wanted to go over some trade ideas and some of the things that stand out right now. Just get a quick video out to members here on what I'm watching and what I think some potential trading ops over the next week or so, or actually coming weeks here if all these charts play out. Starting out, I don't want to spend too much time on the broad markets. I just did a market wrap yesterday and today, so really nothing's changed there. I showed you the levels that we had pulled back to, but we do have these bullish divergences that I highlighted playing out right now. You can see on the 60-minute chart. Sorry, I should have mentioned I'm starting out here with NQ, the Nasdaq 100 E-mini futures, tickers right up here. The only thing I've done since then is added these levels on NQ and ES. I'll get to ES in a second. About 62.72 or so. I see some minor resistance there that we need to clear. I have reactions here, reactions along the way. So I think this is a level. We're starting to clear above it now, and I think that'll open the door for a move up to that 64.08 level. Remember, I'm still waiting for the next buy signal to come on a break above that's Wednesday's high as well as these previous reaction highs there. So nothing's changed in that outlook. So that's still what I favor. And then if and when that gets taken out again, I have some upside targets here. Ideally probably come up here to at least this 65.53 on NQ, and possibly more. So we'll take it as it comes if this breakout occurs. And on ES, I added a comparable level right here to about 24.93. Again, you can see those are some recent reaction highs right here, some reactions along the way. So I do think it's a valid level, and we're actually, as I do the video, right on it right now. So if we can power on through there, videos are always time stamped. I don't see it as I'm recording, but the time's I think down here in the lower left-hand corner. So if we can pop through there, again, that should open the door for a move up here to that 25, 22, 50-ish level. A lot of reactions there. I think that's a key level, and that's what we need the S&P 500 futures to break above to run. So you want to see both NQ and ES take those levels out. And again, so to keep it simple, we don't have so many reactions on QQQ and ES to go off of, but we can just go off of Wednesday's highs right here. And you do have another previous reaction. So this is QQQ. So this is again the bigger picture here. You had a pullback to the 50% Fibonacci retracement here on QQQ. Also a back test. We had a breakout here above the uptrend line. Back test number one. Another run up to this those highs on Wednesday. That level I'm watching. Pull back to back test the trend line, and so far we're moving off it, but we still have work to be done. As I say, resistance is resistance until unless taken out. So let's see what happens. If we can turn up here, we keep this PPO 9 EMA on a buy signal above the 0 line, and that would be bullish. On SPY, similar story, breakout and back test of this downtrend line here, and so far we're moving off it. But still, I showed you the futures have to take out those levels we're testing right now. And if so, we come up here and then we could have a test of this level. And if we can take that out, then we should be able to run. Okay, and some other things that stand out. I posted in the trading room this morning a couple ideas that stand out to me. If I'm correct on the market, and keep in mind these other trades I'm going to cover right now are not 100% contingent on my scenario in the broad markets playing out, but largely. And what that is would be a short trade on gold. Yesterday I closed out the GDX swing trade a little bit early, expecting a pullback there, expecting a pullback in gold, and we closed the gold swing trade out. Was it earlier, maybe last week, earlier this week? That closed that swing trade out because again, if the markets rally, I suspect that the fear trade in gold and treasuries will begin to unwind and at least have a correction there. But more importantly, this is a weekly chart I'm showing you here. This is the primary downtrend line off the last bull market in gold, which ended in 2011. And so it forms this large, if you look at the uptrend line down below and the downtrend line, that's a large, very large symmetrical triangle pattern. And gold kissed the top of that trend line pretty much today, actually, or the futures did tonight. And it's had a pretty sharp reversal so far. This is what it looks like on the daily time frame. There was some resistance up here around 123.25, but there was also a gap right here. Let me mark that gap for you. I'm referring to right here where the that pointer is, and you can see that's so far where gold reversed, tried to pop into that gap. Had a pretty impulsive reversal so far today, and that will, if we close the day like this, it will leave an island top. An island top is when you have a single candle alone, like an island out there. You have a gap on both sides. So we gapped up above this here, above the previous candle. There's the body of that previous candle, and so far the body of this one. So now, an island top is a pretty significant topping pattern, and so that could set the stage for a multi-week swing trade here. May consider DGP and DZZ. There's a couple of I'm sorry, leverage short trades on gold. Gold doesn't move as much as the miners. Miners, you can trade Nugget, NUGT. Let's look at GDX for a second here. There's GDX. There was that head and shoulders, inverse head and shoulders pattern. But GDX has a pretty significant resistance area, which it moved a little up into, and it's still, well, right now it's right back on there. It's about 21 at the $21, $21. Excuse me, frog in my throat there. So about 21, and we've come back down. So after a brief overshoot, we're back to 21. We have some uptrend line support coming up right here. I'll show you that on the 60-minute chart in a second. And of course, this trade would be almost exclusively contingent on the gold trade playing out. In other words, a decent pullback in gold. So again, these are interrelated trades. GDX has been rising because of gold. Gold's been rising because of the fear in the market. It's a flight to safety trade, and so therefore if we can get a decent rally in January, or at least in the next few weeks here, we might see some of that fear trade come out, and I could see GDX possibly coming all the way back here to 1980. I'll hone in on some price targets if I make that an official trade. Here's that uptrend line on the 60-minute chart, and we do have also, worth noting, some negative divergence on the recent highs in GDX here. So again, you can trade GDX. Keep in mind, if you use Nugget or Dust is a three times inverse short for GDX, that if you get caught in a choppy sideways market, that's when the decay is awful on GDX or Nugget. I'm sorry, Nugget or Dust. And what you want to do, they work great if we get a pretty quick, sharp pullback, which if we get a rally in the market, I think that will be the case. Then Dust should outperform. What I mean by that is, if you can catch a pretty strong unidirectional trade where you don't have a lot of givebacks in price, like this point right here, then you can actually do better than 300 times GDX when you're in Nugget or Dust. But when you get caught, if you're holding Nugget or Dust during these periods like this, where there's a lot of back and forth price action, sideways trading, that's when the decay happens. If you don't understand why, go to the FAQ page. It's under resources at the top menu of the site. There's an FAQ section, and go under ETF related questions, and I give an example of the math and how and why that works. And another one I'm still liking, although it's getting a little bit stretched near term. There are some divergences on the 60-minute chart of the futures. I'll get to that in a second, but that's USO crude oil. And we had this recent divergent low right here on the 60-minute chart. Let me draw that out there. So prices from this point to this point made a lower low with nice bullish divergence on the 60-minute chart here, PPO and the RSI. And you can see we've had this sort of a basing type pattern here recently, which we seem to be clearing right now, just barely. I could probably move that up a little higher there. So we're just starting to clear that. And we did take out the downtrend line as well. So there may be more upside in USO as well near term. Here is the daily chart of USO. We had that very steep downtrend line. It's the same downtrend line I just showed you on the 60, but you can see we also had bullish divergence on the much more significant daily time frame. First time that we've had this bullish divergence really since the correction. So, USO, if it can power through the 60-minute divergences, which I suspect it will, then it looks good for another up here at about the 1063 level, and that would give us about another 3.8% upside. So a little room left, but it's actually, it's come up quite a bit, but again, this is bullish so far. Now, if we pull back, if those 60-minute divergences play out, maybe we pull back, come back in, test this up the downtrend line before we move on up to that 1063-ish area. But that would be my next swing target on USO. And then finally, the weekly chart, I mentioned this was a support level right here. Quite a few reactions along that 950 level, which is where we fell to on the weekly chart. Very oversold. And so far, a pretty big green candle coming off that level. So there's USO. Let's look at CL real quick. Okay, the CL crude futures for you futures traders. There's that divergence I was mentioning there, but that may continue to be burned through. That sometimes happens with divergences. They're not, like I always say, divergences in themselves are not a sell signal, and if used in conjunction with other technicals. Now, what I'm talking about here, the more significant daily and weekly time frames are bullish right now. So that would allow me. We've had divergence for a while here on CL. You can see we had it at this. Well, we had it right here, this point, and now we've extended it here, and so it may very well continue to extend. Most importantly, right now it's not confirmed divergence. We have the PPO pointing straight up. That's a momentum indicator. The RSI is moving up, so therefore we can come on up here to that 5032 level. That's my initial target for CL right now. Has been for a little while. And by the way, while I'm on these charts here, just to jump back, there's gold futures, GC. I don't think I covered that earlier when I was covering gold. You can see the breakdown there of the 60-minute uptrend line. We had negative divergence on the 60-minute chart, and there's a pretty impulsive move out of there. So this is, again, for you GC traders. And you can see some of the levels of blue lines here. These are all potential price targets on a pullback. I think we come back down to at least this 1256 level here in the coming weeks if the market continues to rally. And of course, related to crude would be your energy stocks. You have XOP, reinflation trades are what I see going on here. I think the market and a lot of these sectors, just plain and simply, we're too oversold. As I said before, the pendulum always swings to the opposite direction, a little too far to each side, both during uptrends and downtrends. That's usually the case, especially during sharp downtrends. So we can see here the energy stocks got beat down, rightfully so. Obviously, crude plunged, but let's try to move that line here and measure, just to give you an idea from the highs there back in October, XOP, and this is again a sector ETF. This isn't any one single stock. It's dropped 46%. So how much are the energy stocks going to fall? Again, these are the largest ones in the exploration and production sector. That's what the ETF will hold. It doesn't hold your, the ones that are on the verge of bankruptcy, penny stocks, all that stuff. So again, I think things got a little overdone to the downside. I do think it's the start of a bear market. I do think energy stocks will probably see lower lows in 2019, but as of now, the trend is bullish, and they're going to track oil. So, of course, you can do XLE as well. I'm not as big a fan, but you'll probably have some big gains in XES because these are the ones that are really priced for death, a lot of the oil and gas equipment and service stocks. But a little more volatile, but those are your three big ETFs, XLE, XES, and XOP for trading the energy sector. And finally, the other things, we have the official trade ideas on KRE, the banks, regional banks. They continue to outperform XLF. Yes, correct. There's a reason I picked KRE over XLF. You can see, XLF will go up, and I think it certainly a potential trade idea, but I'm still favoring, at least at this point in time, the regional banks, and they have been outperforming lately. And we're getting sort of close to our first target, a little room to go, and I'll maintain the second target for now. I don't see any reason at this point in time, especially if the markets clear those levels that I was talking about on the 60-minute charts. Then we get that breakout, then we'll probably continue on up. So we'll watch things. I'll keep an eye, and if, as you know, I did it recently with the GDX trade yesterday. If I see a reason to close a trade out early, whether it's at the first target or even before or sometime after that, I will do so. And again, that's what I did with GDX, and I've done it with quite a few trades. And it's a fast-moving market, so I'm not going to stick with a price target that was set, weeks ahead, just for the sake of sticking with it. If I think it's prudent to close a trade early, I'll let you guys know. And finally, that's about it. Oh, cut. I'll probably add this one today as an official trade. I mentioned I did a video the other day with the timber and forestry stocks, cut or wood. They still look good. Was very close to pulling the trigger and adding that as an official trade yesterday on the pullback to that 23.89 support level right there. But the market, the sell-off, I just wanted to see some evidence that it was what I suspected. Nothing more than just a profit taking, a normal healthy sell-off. I'm talking about the broad market here. Nothing goes up forever. We've had, nearly 6 days of consecutive gains in the broad market up until yesterday. And so therefore a pullback is to be expected. Nothing goes up forever, and so far so good today. So I'm going to wrap it up here. Obviously, if there's some other things out there, but those are some of the key sectors I'm looking at, and commodities. I think, like I said, gold, treasuries, time to come back in, especially if these bullish scenarios play out in the market. And finally, right now, there's safety in numbers, and with such volatility in the markets, you'll notice my focus has been largely on sector ETFs, commodity ETFs, indexes, because when you have 3-4% daily swings in QQQ and the index ETFs, you don't need to take the extra risk for individual stocks. Yes, you do get more bang for your bucks. And in a slow-moving market, a trending market, you'll see me put more of my effort on individual stock picks. But right now, why take the risk? Apple's a great example. Apple's an individual stock. You could trade QQQ, which you have good exposure to Apple, or you go with Apple. And yesterday you were hit with a 10% loss in a single day, and it came out of nowhere, like as they usually do. Big moving events like their revised guidance came after the close. This was not even an earnings-induced move. This was just a guidance that they came out. They don't report to the end of the month here, I think on January 31st. So that's just an example. Why take the risk right now when you can have nearly the same gains in QQQ? Again, I'm talking about the basket of FANG stocks, the big market leaders. But with that being said, if you want an opinion, price targets on anything, which I did, I know quite a few people asked about Apple yesterday. I don't have a strong opinion on Apple. Maybe dead money for a while might be my guess. But either way, let's wrap it up here, and I'll get this video out as soon as possible. This has been Randy Finney with Right Side of the Chart.